Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Jeffrey Tucker. He is the founder and president of the Brownstone Institute, and he is a former editorial director of the American Institute for Economic Research. Jeffrey, welcome back.
Oh, it's good to see you.
Yeah,
Thanks. Yeah,
yeah,
it's good to be back.
it's absolute pleasure having you back on Wall Street Silver.
I
So,
mean, last time we talked, we created a scandal of something. Various scandals. I remember that video went all over the place. So
yeah, exactly. And I remember
you
last time.
tend to draw me out. You make me say things I'm not supposed to say, so that's good.
Well, good. Hopefully, we could do that again this video. So basically, what I first wanted to ask you, Jeffrey, is the trade between Russia and China is growing rapidly, and the U.S. keep on sending military equipment and financial aid off to Ukraine. In your opinion, Jeffrey, are we heading for a global war or even World War III? What do you think?
I don't see how the American elites could not have seen this coming. I mean, it was inevitable once the sanctions of Russia came about, and I have no idea why that happened. And we don't have any record in all of human history of sanctions, working to change governments to come around. You'd think we would have learned that after Cuba. Yeah, we keep trying it, and it's pretty goofy. And so the U.S. slapped all these sanctions on Russia, which actually arguably is not hurt them in the long run, but it has driven a much closer relationship with China. So we keep doing this. I guess there's a lot of people in the U.S. that sort of long for the Cold War
Hmm.
because it just sort of provided a nice pretext for endless holding on to and ramping up of power and spending and that sort of thing. So it's frustrating, isn't it? You'd think that peace would be at a premium in Washington, given the U.S. history of all this nonsense, but especially after the Iraq War and so on. But it's not, and
Yeah.
there's just too many people who benefit from war. My worry in this case is literally that they have no idea what they're doing. I mean, it's a little bit they went into this war with U.S. and with Ukraine and Russia with no end game in mind, and very similar to the war and the virus. It's like what exactly are you trying to achieve? After a while, nobody really knew. It was just sort of get mad at the virus and do a bunch of crazy stuff to let the virus know that we're really mad at it. And it's similarly with these with sanctions against Russia and
Yeah.
the funding of the Ukraine war. It's just we're mad at Putin, and this is what we do. We spend taxpayer dollars and further the conflict instead of peace. That's super tragic from an economic point of view. I mean, I just long for the old days, which was not too old days, where we actually had we were headed toward a global economy and free trade. I mean, it was the work of generations after World War II to give us a globalized world of trade and prosperity for everybody.
Hmm.
And we were tweaking around at the margins of this to try to improve it and get it, but everybody kind of agreed, that this is what we should go for. I blame Trump for a lot of this, actually, because he's the one who started with all the tariff thing, which was tariffs against whole countries and whole classes of goods, and which is just crazy. And that all began essentially after his election. He was not elected to start a tariff war, but that's what he cared about the most. So that kind of got ramped up, and it was with Canada and then Mexico and then
Right.
Germany, and you just went down the list of whoever with whatever countries with whom we had a trade deficit and just started targeting them with tariffs, thinking that somehow he was being a good businessman here, without even understanding what a trade deficit is. They eventually got around to China in 2018, and that trade war with China bled into the COVID response, I think,
Hmm. Do you think
and basically the end of the world starting 3 years ago.
Do you think, Jeffrey, now that like what you're saying, before we used to have free trade and now we're moving into a complete new world order and everyone's fighting for it. You see China and Russia are fighting for their own new world order and you see Europe and US pushing for theirs. So is it completely distorted now? Like there will never be free trade for a long time because everyone's pushing for their own new world order? What do you think?
It seems that way. One of the extraordinary thing is that after World War II, actually, sorry about the cough. The push for free trade actually began after the disaster, the Smoot-Hawley tariff in 1932, and that was a huge mistake. And that's when the power of trade was taken away from Congress and put in the hands of the
Mm,
presidency. If you read the original Constitution, it's clear that the Congress is supposed to be in charge of trade relations, but they screwed it up in 1932, and that led a whole group of sort of well-intentioned diplomats in Washington and people with good intentions, really, to take the trade power away from Congress and give it to the president. And then, of course, we had a rotten war. But coming out of that war, there was all the free traders were entrenched very deeply at the Bank of International Settlements, at with the newly well, that actually dates way back. Bank of International Settlements and the new Bretton Woods institutions, World Bank and IMF, but also in the U.S. State Department. And there was a real push for global free trade, but under the liberal theory that if you're trading with each other, you're less likely to be shooting each other. And that worked for a very long time. I mean, uh, uh, now in 1948, of course, we had this triangulation occur with the Truman administration that started this Cold War, and that lasted until 1989. It was grim. On the other hand, it was stable,
mm.
and the rest of the world got freer and freer. And then once the Iron Curtain melted and the Soviet Union collapsed and the Cold War came to an end, there was a push between 1990 all the way up until 2016 for ever increased globalization, with some hotspots along the way, right?
Hmm.
So we had the Iraq problem, and we had the Bosnia issue, and then we had this hot war here and there, but they were always a fairly short duration. I mean, excluding the Iraq war, but generally the trajectory towards a global peace through global trade, stayed on track, and that basically came to an end in 2016, and it was a shock because um, uh, Trump had a bee in his bonnet about world trade,
Hmm.
and but the power to determine trade outcomes was vested entirely with the president. It was one of the few powers that he actually had, and it just so happened is a subject about which he was intensely concerned. So Congress wasn't in a position to do anything about it, and so he just did this march for the next 2 years, and then eventually landed on China, and that's what basically sealed the fate. So I think it's going to be a very long time before we get back to the sort of global economic institutions that fed so much of the prosperity
Right.
that we had and from in 1989 and onwards. It's really one of the great tragedies.
So, Jeffrey, you see the BRICS nations, every from Iran, China, and you see Russia. They want to make their own type of their own type of currency backed by commodities like gold. What do you think about that, Jeffrey? Will that ultimately work?
It will ultimately work. I mean, at least they will continue to try to make it work. I mean, one of the big annoyances for many countries in the world is that the dollar remains internationally dominant, and that has actually intensified since COVID, and so many governments just willingly destroyed their currencies, and the U.S. dollars survived all of that. I mean, not domestically, but not in terms of its value in goods and services domestically. But if you're using the dollars by other currencies, it's very powerful right now, and that's a source of tremendous annoyance because, of course, the U.S. abuses that power and has been exercising all sorts of arbitrary controls on exchange controls and shutting down people's bank accounts from other nations and all this sort of thing. So that is definitely a point of contention with between the U.S. and many of these other nations with whom we've developed sort of conflicts. So I assume that dollar domination, that it's definitely a policy priority for many governments in the world to end the dollar domination of the world.
No, well said. Now, Jeffrey, with all the chaos facing the world, and then you add the Federal Reserve that is always reacting way too late to come and fix their own mistakes. What do you think Jerome Powell will do next? Is he completely trapped? Does he pivot? What does he do?
So I thought probably 4 or 5 months ago, and even the last time we talked, I thought for sure that he was going to stop the rate increases and start a reflation as a way of saving the U.S. economy from recession
Hmm.
and stopping the political meltdown of the White House and all this sort of thing. I don't think he's in a position to do that anymore. And I'll tell you what seems to have changed the Fed, because you notice over the last several weeks, we've got a new hawkish tone coming out
Right.
of the Fed all over again, and I think it was the January numbers that alarmed the Fed so much, because inflation is reaccelerating again,
Jeez.
and it wasn't reported that way when the numbers came out. CPI came out, and Wall Street Journal, New York Times, they all race to report whatever the Department of Labor is saying. So they were using all sorts of hilarious language like, "Oh, inflation cools." Um, they're using every kind of like word you can imagine.
Yeah.
But when you actually examine the numbers, it was clear that month over month that it was reaccelerating. That was further confirmed with the PPI, which was even worse. That was just a few days later, and then the consumer expenditures, the index that the Fed likes so much, but also reflated. So you look at the sticky price index; it's actually going up higher than ever. So that's alarming, because what it means is that. So what that means from the Federal Reserve point of view is that the $6.5 trillion, whatever, that they created over the previous 18 months,
Right.
or during the 18 months between um, March of 2020 and 18 months later, has yet to become endemic. And I tell you and the reason for that is that velocity is on the increase. And that is something that the Fed should have anticipated. I mean, velocity fell through the floor, after the pandemic crisis hit, and
Right.
everybody just started stuffing all the money in the mattresses. But velocity has turned directions rather dramatically over the last 3 or 4 months, and is reversing course, and it's definitely headed back to where it was in 2019. And if that's true, that really just pours gas on the fire. And
Wow.
the response that we saw from aggregate prices in January, is an indication, not of well, it's an indication that all those floods of money are reaccelerating in terms of their uh, transmission rate, or the rate at which dollar changes hands. So, and that just fuels more inflation. There's nothing the Fed can do to control velocity. Velocity is purely an extension of what consumers are doing. But
Right.
in the old, is overly simplified equation of exchange, MV equals PQ, they can control the M part, sort of, but they can't. And actually, money supply has been declining. So consider this, right?
Right.
If you look at M2, money supply is declining,
Hmm.
but money velocity is reaccelerating, which once you shove those things together and put them in on the other side of the equation with prices, what you see is that prices are still going up. Now, what does this mean for the Fed? I mean, it means they have to continue to get their sponges out to sop up all the excess.
Right.
And so there is no chance that this is going to happen without hitting that terminal rate. But the problem is that with a reacceleration of inflation, that terminal point keeps rising. So they thought they would meet it middle way, right?
Yeah.
So they
Yeah.
started at zero, and they bumped it to, what are we up to, 4.5, something like that.
Hmm.
But they expected that inflation would settle down and they would meet somewhere in the middle, and then they'd reach 5, inflation would be 4. Then you can outrun the pace of inflation and cause things to
Calm it
settle down.
down. Yeah.
Yeah, and get it back to that 2% target. But now those hopes have been completely dashed as a result of the reacceleration of monetary velocity. So now they're running a race that they're losing. They have only one choice, and that's to sort of run faster to keep this metaphor going, which means that they're going to have to raise rates higher and higher.
So Jeffrey, over the past or over the next 2-3 years, annualized interest on the actual national debt is soon to exceed 1.5 trillion or more per year in interest payments alone on that debt. Is there a point or a limit to where it forces the Fed to completely pivot because they can't handle that interest on that debt?
Yeah, that's a fiscal problem. They leave that to Congress. They don't care. I mean, they're yeah, they don't care. I mean, they're glad to bust the budget. I mean, they're just managing the money, monetary policy, but they consider that fiscal policy and leave that to the politicians to figure out. So it creates a massive spending leakage for the U.S. Congress, and I feel, well, I don't feel sorry for anybody in Washington, but the Republicans, if they actually intend to do something about the national debt, are themselves in a real fix, because the interest payments on the debt are going higher and higher and higher and eating away the discretionary power of spending by Congress. So there are things they can do. Sell federal lands, that would be a good start, right? I mean,
Mm-hmm.
you could actually, by selling federal assets, including the lands, they could actually take a big bite out of this debt. That would be, but I don't even think anybody's talking like that right now.
Yeah, I don't
It's a
think they will.
problem, it's a problem because of course, if they don't keep increasing the debt ceiling, that's going to cause, I mean, if they actually stop approving debt ceiling increases, and we're in the middle of this debate right now. And if the Republicans balk at that, which they should, we'll see the same old shutdown drama we had in the past, right? And it's going to be boring as hell. I mean, they're going to shut down the Washington Monument, and people are going to get mad, and people aren't going to be able to get their passports. And then they'll pull all the usual ploys. I mean, the way the administrative state reacts to these kinds of resistance, spending resistance, is just to figure out what parts of government the people actually use, and they shut those. Wow. And that's always the trick, and it's happened, so many times. We know how it works, and then the Republicans, have to, get all the blame from the allegedly angry public, and they eventually cave once the bond rating agencies come along and start taking a more careful look at U.S. debt, and when the prospect of downgrading causes widespread panic in Washington, and then the Republicans cave. It's always the same story.
So, Jeffrey, we're dealing with historically low unemployment, and normally that leads to economic strength, but we're obviously getting conflicted data. Is this confusing Fed policy?
The Biden administration loves to brag about the unemployment rate, and people are stupid enough to believe it. Unemployment has been an obsession from economic planners since probably the 1930s, ever since the Great Depression. But we're entering into a very strange stage right now, where we really have to disaggregate labor markets between the sectors in which they apply. So we have a huge surplus of labor and information in the information sector and professional services, and massive shortages of labor in hospitality and retail and construction and other areas. So what's happening here? This is tremendously fascinating to watch, actually. It's amazing to watch it. What we're realizing is that when Ben Bernanke in 2008 started with the zero interest rate policies, what that did was it massively subsidized the right side of the yield curve and led capital to try to find some sort of return somewhere, which you couldn't get in the left side of the yield curve, right? So suddenly you had all these high-end sectors and speculative ventures and long-term capital goods all sucking in all the capital. And that's where it was all driven. And they were spending hand over fist on everything, but especially on labor, right? So they just kept throwing bodies at their companies, so Google and Amazon and Microsoft and Twitter, everything became just wildly bloated. And those are just the big names. Everything in that sector just became wildly bloated. And then, of course, the pandemic, my God, it took an already terribly distorted production structure. And in a true market, you're supposed to be I mean, labor works just like capital. It finds its highest return. So labor was sucked in a real market. It's allocated according to consumer demands and
Hmm.
existing savings rates. But after Bernanke screwed everything up, suddenly labor just migrated to all these unsustainable high-end investments, and that lasted a good 15 years. And the pandemic hit and just went like crazy. So now that's all ending, and you have the Fed reversing policies, making short-term the left side of the yield curve more attractive for capital. That's why you're
Hmm.
seeing savings increase and why you can actually make a little bit of money in CDs right now. This is a complete change of 17 years. But what this means for people personally is dramatic, and actually, I think it could lead to a massive civilizational upheaval, as you've got a whole generation of people that are led to believe they get the right credentials and they hang around on Zoom enough and trick their bosses. We're talking about millions and millions and millions of people that they're gonna get rich this way
Right.
and be able to pay all the bills with doing no work. I mean, it's like magic, right? Well, all that is ending with the huge shortages of labor and hospitality and retail and these other sectors, and a massive surplus in the information professional business side of things. And those are starting to move very dramatically. That's why you're seeing all the firings and all these companies, even as you've got restaurants that where there's got reservations out weeks, and they still can't open on Monday, Tuesday, and Wednesday because they don't have enough employees. So this has to equilibrate at some point. But what it's going to mean for a whole generation of sort of, for lack of a better term, white collar workers, they're going to have to downgrade their social status.
Wow. That's pretty
And
scary.
yeah, it's tremendously scary. In 1942, Schumpeter said there's nothing more terrifying for a civilization than for people to lose their social status. That
Hmm.
that is scarier than generalized depression. That is exactly what's happening right now. Now. You cannot look at the unemployment numbers to see this. You have to disaggregate the labor markets to see this phenomenon taking place. And I'm telling you, it's just begun. We're
Wow.
just seeing the first signs of it. It's going to get far more extreme.
So, Jeffrey, losing the US dollar as a world reserve status, I've seen a lot of places that it would turn up to be a loss in about 20 to 30% in quality of life for American citizens. Is that playing into the same theme that you were just talking about?
Yeah, I think that your estimate sounds right to me, but I do think this is maybe 5 or 10 years away. I mean, we've got a
Mm.
long way to go between now and then. In the meantime, Americans are gradually discovering that while their purchasing power domestically is going down, it's still extremely strong internationally.
Hmm.
So you have this migration to Mexico. I mean, as best we can tell, which has gone up 85% between 2020 and the present. People are moving out, and so you're losing intellectual capital is being drained out of the country. Whether the dollar stays strong internationally, it's weak domestically. It's a good time to get out. This is also why you see such attacks right now going on about U.S. Leaving. This is why the State Department has issued at least 24 travel advisories this year alone. I mean,
Wow.
they're trying to get people not to go anywhere, and it's hilarious. If you go to the State Department website and look up any country you want, it's probably on the travel advisory. I mean, they're telling you not to go to Sweden. Don't go to Sweden. What?
Uh,
And certainly don't go to Mexico. You saw the New York Times the other day. 2 Americans are killed. Don't go to Mexico. It's dangerous. Everybody's rolling their eyes. I clicked on the link for the UK. They say don't go to the UK, but my God, these bombers and these terrorists, they just show up in shopping centers when you least expect them and blow up the place. I was
Crazy.
like to my friends in the UK, are your shopping centers being blown up? And they're like, what? I have no idea what you're talking about. So you have the State Department inveighing against the US traveling, much
Right.
less expatriating, because there's a tremendous incentive to do that right now. And that, I assume, is going to last at least for a few more years. Now, you talk about the U.S. losing the status of world reserve currency. That's when the trap really hits. I mean, that's what would be trapped domestically and internationally, both, and it'll be a disaster for Americans. I mean, no matter how you look at it, let's just put it this way: I am not optimistic.
It's not looking good for 2023, 2024.
That's right.
Awesome. Well, thank you so much, Jeffrey, for coming down to Wall Street Silver. It's a huge, huge pleasure. And then hopefully we can have you back on in the next 2, 3 months as the market develops.
Okay. Thank you. Wonderful.
Talk to you soon.